Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, July 25th, 2011 is brought to you by Realtik. Alright folks, right into the charts today. There was a ton of fear-mongering over the weekend, and we all know what that's about, right? Politicians kind of saying that if we don't reach this agreement here, you're going to see a crash in the markets. We need a deal done before the Asian markets open on Sunday night, blah, 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 this is horrible, and ultimately, they were all wrong. What they're trying to do there is push the people, and again, we're talking about the average people, to panic, thus pushing their agenda. And it's one of the shadiest activities. They should all be ashamed of themselves for doing it, frankly. Obviously, the markets show us the truth today. There was no real need to get the deal done last night by the time the Asian markets opened. Not a big deal. Spider's down 36 cents, folks. That's it. Now, if they don't do it by August 2nd, well, that could be an issue. But again, the fear-mongering that was put forth by Tim Geithner, President Obama, John Boehner, all these politicians was absolutely nonsense. And the only thing it did was hurt the average trader out there, the average investor. The average investor, as you can see, panicked early in the day, unloaded early, and the markets just slowly rebounded back up. And again, don't think the institutions are the ones selling down here. That's not the case, folks. It's absolutely not the case. So again, that's where the little guy gets hammered by taking out or selling out of his positions. The markets then float right back to the flat line, and that's where we have it today. And again, you just have to understand the charts, understand exactly what's going on, and you'll be okay. And that's why you want to join us here at InTheMoneyStocks.com. All right, bottom line is this. The markets have traded up. A very light volume today. Notice the volume dying out midday. All eyes continue to be on these debt ceiling talks that are continuing. Europe is more of a quiet issue now. That's not really a big issue. If we take a look at the US dollar, which is the UUP chart, the dollar's slightly lower, but really no major move there at all. And again, it's all eyes on the debt ceiling talks across the presidency and across the Congress and so forth. Now, again, as we come towards the end of this week, I do think it's going to become a bigger deal, because if you haven't reached an agreement by Wednesday or Thursday, you really only have till next Monday or Tuesday to get this deal done. And I think the markets will start. You will see some institutional selling begin probably starting on Wednesday or Thursday if no deal has been reached. And the reason I say that is because institutions will need more than just one day to unload if they want to take some of their risk off the table going into that debt ceiling kind of weekend where it has to be done. If we go back to the SPY again, folks, you opened right here. Notice this level that you opened on. See this pivot high right here in the pivot low gap window, the pivot low right there. And that's exactly the level that you're looking at right now. That was the support of the early morning session. And ultimately, the markets from that point moved up. This was a little bit of minor level here. I gave out a short call on a pierce of the blue line. That was a great call in the morning session. As you can see, the markets pulled back nicely off of that. If I zoom in, you can see it even better. Right there, and a beautiful 25-cent pullback on the spiders for a scalp. And that was the scalp on the spiders given this morning. We came back in here, settled right on this little orangish line, bounced off of it, broke higher, consolidated, broke higher, and are really just consolidating now right around the 20 moving average. Markets again, spiders down 28 cents, Dow Jones Industrial Average down 48 points, NASDAQ down 4, and S&P down 3. Again, basically a 0.25% or less drop across the board, very minor. Now the NASDAQ is probably the strongest index today, down just 4 points on the back of great moves out of Google. Google, even on a small down day today, up $5.25. You have Apple Computer also having a big day, up $5.75. That's nearing the 400 level. In fact, the high of the day today was 400. The interesting thing about the 400 level, folks, is that after hours, after earnings were announced, Apple hit 404 to 405. My guess is that's where it's going to go. All right? And again, that'll be ultimately where it's headed once it gets through that 400 level back to the 404, 405. I won't be looking to short that most likely until it's at least 410, maybe even 425. Let it get extended. I still think the market's actually going to hit new 52-week highs in the not-too-distant future. I think that's coming not too far away at this point, and you will be seeing that. And again, the reasoning behind that is a lot of shorts have piled on board, a lot of amateur shorts, a lot of bearish sentiment because of the debt ceiling. That will be resolved, even if Obama has to do it himself by just overpowering everyone else and just raising the debt ceiling alone without any sort of budget in place or budget cuts, and that will give a relief rally to the markets that probably take us back to the double top 52-week highs on the SPY. If you want to see that right now, take a look right here. You're not that far away, 137, and we're right now at 134. That's only about 3 points away. So 3 points on the SPY is the equivalent to about 20 to 30 points on the S&P 500. Any sort of big day on a rally or short squeeze, you probably get there. Again, once you get to that double top up here, then I think you start to have a little bit of resistance. The other thing to notice here is you had a nice move up off of our cycle date. This was our cycle date. We called it perfectly. The move up took place. Look at how you've now stalled out 2 consecutive days and are consolidating. This is the beginnings of bullish consolidation. So the charts are also telling me that you will have a secondary rally on point here in the not too distant futures, to watch for that. Okay, let me see if there's anything else here that I want to mention as we continue to look at the daily chart on the spiders. You have a minor inverse head and shoulders pattern here. Again, a lot of people were talking about this head and shoulder pattern here. Let me just draw that in. But we kept on saying it's going to fail, and ultimately I do think it's going to fail, and you can see it's starting to fail as it moves up here. That was a great call by us as well, and the whole reason was the media was talking about it. Whenever the media talks about one of these big patterns, it always fails, because the average guy, just like always, goes on that side of the trade with the media hype and gets it wrong. And of course, it's not that they're getting it wrong, it's just the institutions are going to automatically go the opposite way. It's a rigged game, folks. If you're not on the right side of the trade, if you're not on the side of the institution, you're going to get hammered. And that's another reason why here at InTheMoneyStocks.com, we have not had a loser in over a month in the Research Center hot charts and alerts. We're going to continue to bang out winners, and that's the way it has to be. Now, we'll always have a loser here and there. I mean, it's just the nature of the beast. We're never going to be perfect, but we're going to keep it at 90%. Overall, 90%, sometimes even higher, winning percentage. And again, there's no hedge fund out there that can do that. None. You join us, you're joining the best of the best. And there's a free trial involved too, so go take the free trial in the very least. In any case, a little bit of an inverse head and shoulders here that I'm watching, as you can see right here. Could be a little bit of an interesting thing. The neckline essentially would be right around here, flat across. It's not a great one, but you could make a case for it. If that gets taken out, you could make new 52-week highs on the market. And again, I don't think you're going to go that much higher than the 52-week highs, but I do think a little bit on the upside is possible, just based on the nature of the squeeze that would probably take place as the debt ceiling takes effect. And earnings have frankly been very good as well, and that'll continue to add fuel to the fire. All right, now eventually later in the second half of the year, that'll fade and we'll start to head lower again, but short term it does look pretty good. All right, guys, let's take a look at a couple other charts out there. We talked about the NASDAQ having a good day because of Google and Apple. Baidu has earnings today after the bell. That stock is making new 52-week highs today as well. Beautiful little move up there, about $2 higher. We'll see what the earnings have in store for after the bell. Financials, which were the strongest last week, and I gave out a great call on Bank of America when everyone else was too scared and questioning me. I gave it a long call at 9:45 here on BAC to the long side. Made a great money on this pop. Sold right here at the highs, and I'm going to look to buy it back on any sort of pullback. If you want that entry, obviously join the Research Center, as my Research Center people will get that alert. Okay? So that looks good as well. Bank of America, Morgan Stanley. Look at the move on Morgan Stanley on the charts too. Look at that ginormous move up last week. Again, consolidation coming in now. That'll make for a very interesting chart in the next couple days as well if we continue to get consolidation there. All right. One of the other plays that I continue to be a big fan of is MOTR. MOTR, low side of the chart here, down from about 30 and change on the charts. Look at this, 20% of the float short. This one will eventually go back to 10 in the not too distant future. The question is just when. And ultimately, again, I love it down here in this low 7 range, high 6 range. Very, very cheap down here. PE next year, forward PE is something like 7, a little over 7. Very, very cheap. All right, let's take a look at a couple other plays. Chevron and Exxon, flat on the day. Those stocks have been very strong of late. You can see them moving back to their double tops here on Chevron, and then consolidating today, basically a flat day after gapping down, moving back up with the markets. And again, it was all fear-mongering today. Over the weekend, since Friday evening, when they called off the talks on the debt ceiling raising and the budget cuts and everything, it was all about fear, spreading fear. The media spread it. They ran with it. That's what the media does. The media is going to harp on one specific thing, bad or good, especially if it's bad, and just go with it and make it as bad as possible. The average person watching the news over the weekend probably thought the world was going to end today, probably thought we were going to have a financial crash. And ultimately, no, of course not. It's just fear-mongering. Ignore it, follow the charts, you'll be fine. All right, and again, here at In The Money Stocks, no losers in a month, folks, in the Research Center. You want to come join us ASAP. Going back to the SPY, let's take a look here. Little bullish consolidation into the 20 moving average. If we make another move up, this is going to be your short-term target at gap fill. I wouldn't be surprised if the markets end somewhere around there. And again, any sort of word that there's a debt ceiling agreement, and the markets will take off to the upside in a major way. All right, now ultimately, if we don't get an agreement, yeah, the markets will take a huge hit. I just think the odds of that are 1%, literally 1% out of 99% chance that it doesn't happen like that, okay? Other than that, folks, I just encourage you to come join us here. We're continuing to make money today, last week, last month, you name it. The money keeps piling up. Come join us. The small caps have been great. The large caps have been even better. And again, there's a free trial, 7 days for the Research Center, 7 days for the Intraday Stock Chat. We'll see you soon. Take care.